All right, what's going on, YouTube? This is going to be the trade recap for June the 1st. Today is the first month of June, and this is our first trade for the month of June. And as you can see, we won the trade, but I'll go into why we lost the trade. Unfortunately, we did lose a trade because I did exit short when we were right here, and I'll give you my reasoning why. Reasoning one was because I didn't want to target to the upside today. In fact, what I wanted to do was I wanted to come down here and I wanted to target London lows right here. Right? This was a London low that I marked out in black. That's what I wanted to target. I wanted to target this unopened gap right here. I wanted to target this blue London low right here. But what ended up happening was price during pre-market came down and we just absolutely stopped out through it. I mean, we come in and we have the filling of a fair value gaps up here. We're filling gaps, and then we have the break of structure right here, break of structure. Then we have the fair value gap filling right there, and we have the inverse fair value gap right there. We have good, strong signals to the downside. What I was hoping for at least was for this candle to continue trending, hopefully fill this fair value gap, and then start slowing down. That way we could enter the target here, but then we got stopped out immediately. Even then, we came down and we automatically just touched this on market open, this London low. So because we took out all those lows, this was a great opportunity for us to be bullish today. So what ended up happening, we ended up inversing a fair value gap, which is what I wanted. I wanted this fair value gap to get inversed. Now, one thing that I will also mark out is another fair value gap, as you can see on this really big spread right there. Big fair value gap. So what happened? So we inversed the fair value gap and now we're trailing to the upside, but we can't have an entry because there's no fair value gaps lined up right here except for this low down here, and there's this big fair value gap right here. So we could inevitably just come in here, fill this, and we could short target lows all the way lower, like maybe these lows, this place right down here. So I had to be patient like all, and we had to wait to see how we react to this. One, just this green candle right here is not enough for me. Two, we retraced into it. So I was like, all right, now that we retraced into it and we're moving down and we broke structure on this low right here, on this 5-minute low, that gives us a good opportunity that, all right, now this is respected. We don't have to worry about that. It's done and out the way. This black line that I marked out was a 5-minute high. And what ended up happening was we swept the liquidity of the 5-minute high and we started retracing a lot lower. After we started retracing a lot lower, we filled the 5-minute fair value gap. After we filled the 5-minute fair value gap and I waited for the candle closure, we closed right at the fair value gap right there. So that was enough signal for me to go up. And then I placed my entry. But as you can see on 5-minute time frame, we are just chopping block price action here, guys. I mean, this price action was super bad. If you just look at here, like these are just giant wicks. I mean, there is no way we're coming out of like this zone right there. I mean, if we just count right now, this was the slowest price action I've ever dealt with. This is the slowest price action I have ever dealt with. Just 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65. Wait, oh, sorry. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 1 hour, 5, 10, 15, 20, 25, 30, 35. So it wasn't until fully 2 hours, almost 2 whole hours, that we could break past this high and we could start displacing a lot higher. And because we sat in that trade for so long, our theta was running in the daily decay. When we're right here, we're up $16. When we're right here, this is our new even, because we are just trailing for such a long time that our contract price starts to die down, right? So then once I'm in this trade and I'm already 2 hours deep in this trade, it is around 10:30 in Texas. Then we start displacing a lot lower. And the one thing I was resorting off of was, all right, we fill this fair value gap and then we have extensions out of it. To me, if this fair value gap ended up coming all the way down here and we were to break structure right here, I would have been stopped out. Ultimately, I sat in this trade for a very long time. And to me, I didn't want to sit in that long. And then we started displacing a lot higher. But at the same time, we inversed this fair value gap right here. After we inverse that fair value gap, to me, that was just another signal that, all right, this is a very good point for us to slowly buy out of our position, even though our take profits got hit later on, right? But this is one thing that I want to be key with, and one thing that we could have done a lot better. One thing that we could have done is not trade based off these 5-minute confluences, but rather the 15, and I'll show you guys why the 15. On the 15, what I started doing after I started backtesting this theory was if we throw in our Fibonacci retracement tool right here, because as we can see in this 15-minute 3-candle spread, there's no fair value gaps lying in between there. We'll have an equilibrium. But one thing that I want to point out specific is this. We start moving down, we displace into this fair value gap right here, but we don't close above it. We actually close inside of it. But when we come down here, we tap past our equilibrium into our golden zone range, right? Let's hop on a 5-minute. We tap into our golden zone range, and then we start seeing extensions out of it on lower time frame. So to me, this right here would have been a way better entry. Stops right there. Same take profits right there. We would have bought it in at a higher price, but it would have allowed us to ultimately get better. It would have ultimately allowed us to have a little bit better of an RR, as well as better entry due to more confirmation confluences on higher time frame. Other than that, this trade is not wrong. This trade is not wrong whatsoever, right? We had the inspection of everything we needed right here. We just got hit with the price action play. I mean, price action is just chop block all the way down. As you can see, if we're sitting in this in 5-minute, we are just getting candles, wicks, just boom, 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 bam, 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 bam. So buying after this retracement into here was not a bad play, because we could have entirely just rushed up to here and rushed up to here and rushed up to here, right? Market only started making this big extension right here because if you guys remember from the past videos how I mentioned, this is when people on the western coast of the US start waking up, and this is when businesses start opening up, and then we get retracements all the way up to these highs right there that we did not sweep, that we did not hit. Ultimately, today's trading day wasn't a bad trading day. It was just really, really slow, and we were forced to close the trade kind of early, only due to our psychology. One, guys might have said, all right, well, wow, that's weird. One of the things you guys could have said was like, all right, how come you didn't trust your psychology and wait to get stopped out or hate to hit take profit? My psychology is if I cannot sit in my trade till the midday, till right around this range, and we have no drastic action here or there, then to me, if one, the Texas session did not force market up in volatility, and the Western one did not force it up in volatility at that range, to me, I got to get out of my trade. I would rather lose a trade and then live to see another trading day. Then I would rather lose a trade and go into a new trading day rather than sit in the trade entirely for one whole day. Also, this was not a very major loss that we had, so this is very easy for us to come back on. Other than that, that was today. Super slow price action, but at the end of the day, we were still profitable. Everything got hit. The only thing is we just needed to stay in it longer. Thank you guys for watching. Peace and love always. I'll see you in the next one.